Today, I'm going to walk with you around a step by step so that I can show you exactly how you can be trading or scalping this volatility 75 index. And this strategy, it works in all volatilities pairs. Are you getting the point? So except jump indices. Are you getting the point? So if you wanted to trade jump, boom and crash, then you will need to not go to the low time frame like 30 minutes and 15 minutes if you will implement this same trading strategy. So as well, we are on drive. Trading view is what we are going to be using, so that our step number one, what we always to do to identify the overall trend of the direction. Are you getting the point? You know, the direction of the market, it always move, making the high highs and the high lows, or lower lows and the lower highs. That is how the market do what? That is how the market move. So after identifying those, the high highs and high lows of the market, what you have to do, the next step, to go in the low time frame and start looking the setups going the same direction with the momentum of the high time frame. So the daily time frame, that is what drive give us with this drive trading view. So if you want to start from the monthly, by which means you will switch to go to using MetaTrader 5. You will be using MetaTrader 5 so that you can catch those the high time frame more than the daily. You will be trading. You will be starting your analysis like in weekly, monthly, like that. So as well, now this is a scalping strategy. You don't need to go to the weekly and monthly, as long as maybe you want to swing. So now this is a daily time frame. What we have to do, we have to identify the where the market is going. Right now we have here the market that have been making the high highs and the high lows. If we can see it, that this is a low here, and this is a high, and this is a low here, and we have a high here, this is a low, and we have a high here. This was what? A bullish momentum. So when this happened here with this bullish momentum, and then the market did what? The market tried to shift from this bullish momentum and then started to do what? To make the lower lows and the lower highs. So by which means we have break this structure here. After breaking structure, we came back to make a retest around this area, and then we starting going down. So this is showing us that the market, it is trending down on high time frame. But remember, before this happened, that and then we get the daily bias that to know that the market is going exactly downwards. But we have another structure here. If we can look very well, that the market here in the daily time frame, it have hit this position here. If we get our line and then we take this area here like that, we can see that we have what? A strong resistance where the market started from. Here we can see that around this area the market hit number one. Here it was the first time, this is the second time, and then it have come the third time. So we are expecting that if the market move around all of these areas and then it break maybe below, if it break below of this area, then we will start seeing the movement. After breaking here, we shall see like this. It will be market break here, come back and retest. After retesting, and then we continue down. If this have not happened, because this is a very strong, a very strong key level, now we can see that the market pulls upward again. Do you see? We can see that the market, it moving from this area here. From this area, it comes back to its origin here, or maybe to break this and continue to go upward. So this is what we see in the daily time frame. Now we are just like this. We can go up or we go down. So to go down, we have to wait the daily, break this area. After breaking this area, and then we continue down. So if the market does not break this area, to confirmers. So if this daily close, you can see that the yesterday closed as an indecision, and if this close above this area here, if we close daily above here, if we break the yesterday daily and then we close above it, then this will show us that the momentum of shifting going up is what it have begun. But remember, this is a daily time frame. Even though we break this, we have also another resistance here. We have another resistance here. Also, market can come very well and do what? Let me do like this and remove everything here. So we have here this area. Let me clean the chart. It's too right. So we have our resistance here, where we're expecting that the market can come, and then we go back down. Are you getting the point? Live. So this is our support here down, and this is our resistance. So we can see that the daily it might come and make a retest of this. What we can see that it is a break and retest, because this is the momentum going down is too much. Are you getting the point? And if we can go in weekly, we have what? We have our strong overall trend. So if we can extend this side, this line here, you can see that if we can go in monthly, we have this zone. This is a monthly zone where the monthly has break and then come back to retest. Are you getting the point? If we can see that. So this is a strong break and retest, which means we can start seeing the more buys, and there is some possibilities of breaking this area here. There is some possibilities of breaking that area. So let us go to the low time frame. That is going to be our H4. Chart is loading. So now in H4 we have something here. If we can see clearly that in H4 we have this, if you can see that this is one touch, second touch, and third touch. If we highlight this area here like this, we bring it here, it has become in H4 support. And this H4 support, we have something here. If you can see here, we have this one touch here, and then we also have another touch at around this area. Do you see, which is big here? And also we have another touch at around this area. So these are calling it as what? A triple bottom. This triple bottom, it always present a reversal pattern. Are you getting the point? So if we break this area here, if we break around this area, this neckline, you see, if the price come and break this neckline, so we have to see the big move. Are you getting the point? We will start seeing the big move. We can break, and after breaking the neckline, the moment we come and we retest this area here, are you getting the point? We can come and we retest this area, this key point here. If we will test that key point, now we have to be very keen to see how the price is going to be behaving when it approach this area. Are you getting the point? How the price is going to be behaving when it approach that area. If it bypass that area, we will wait, because this was supposed to be a resistance that will lead the market to come back down. Are you getting the point? So we have to wait to see a reaction here. And remember, when we get some reaction here, remember here, this is the leg line. We can't break it like that, and then we break it like that. But which means also we will keep an eye around this area also to do what? To wait to see how the market will react. Yesterday I posted the signal around these areas. I give signal out around this area where exactly the market is towards to head, where it is heading. Yesterday I give signal around this area. I given it signal here in the shorts. I posted it, So those who caught it, and this was this leg here, it was the TP, and the TP hit. Now we are coming back. How? Now you can see if we were positioning yourself, we have to wait. If we were positioned for a long term bias for buying, we have to wait something here like this. If we get our trend line, like this here, we mark it like this. Do you see that the market, it have been respecting this trend line for some good days? Are you getting the point? So which means to confirm that the market, it will start going down, sorry, it will start going up, we have to wait this area here to be broken, exactly this region here. Do you see this? So if that area get broken, then we will confirm that the market has to start going upward. Are you getting the point? So what we want to see here, this is what we want to see happening, that the market have come from here, breaks above like that, and come and retest any structure around here. It can retest exactly this, or this, or this one. Are you getting the point? And after retesting, we look at our confirmations here, and then we go up, and we take back the market to its original, where it have come from this side. Are you getting the point? To this area here. That is when it's going to be. That is a long-term bias. So the short-term bias, as we scalp, now we see the market where it is playing around. Are you getting it? Now you can focus. You see that the market now is not going up, is not going down. We have spent some good 2 days. Now this is for the third. This is for the third day. The market is just playing on one position. You see, this is the area where the market, it have been playing around. So how do you trade in a ranging market? I highly recommend to stay away from trading this arranging market. If you trade from these arranging markets, it will lead you, as long as you have some experience, it will lead you to be caught. It will lead you to be caught, because the market, it will be going down, going up, going down, going up. Remember, this is what? This is H4. The point. So you have to be aware of that. So when you're trading the range market, you have to really, if you're having a $500 account, if your account is below $1,000, you have to be really risking very small. If you make profit, they will be small. If you make a loss, also it will be small. So until the market gives you overall trend. Now you can see this is what? So this is arranging place. So how do we trade in this arranging place? When we trade around this place, you can see now the market is high and down. Let me delete this here so that I can show you exactly how you can trade to around these areas. So we are going to mark this our ranging region. Are you getting the point? So let us do like this. This is our ranging point. Here high, I'm changing the color to black, and then we mark the low also here like this. So we are going to focus on black. So after identifying this ranging market in H4 or any higher time frame, you have to dive down in low time frame. We are going to go to now low time frame. We can use minute 15, use minute 10, use minute 3, any low time frame. But the good time frame, it could be start from the minute 15, and then you get exactly the order blocks where to use, and then you make your entry in minute 5. So let us start with the minute 15. You can see that we are going to focus on these black areas. Do you see them? So the first time the market came approach and then touched this area. So when he touched this area, you wait the market to bounce. Are you getting the point? You can see that the market touched first here around this area. If you can see that the market touched here, this area. After that, touching that area, it moved down. So because we have to sell high and then we buy low, that is when we trade the ranging market. So before you enter, you have to wait this position here. You have to wait the first leg which started to make the range. Are you getting the point? You have to wait the first leg which have started to make the range. For instance, this is the first leg here which started to make the range. This one. Let me put this line down. Here, this was the first range which was started the ranging position. You wait the market to come and fake it out or swap its liquidity of this area. So when the market come and swaps the liquidity of this area, you wait the move to the downwards, and the move should be exactly like this. What you see, strong with bearish momentum candle, another candle followed. So when you see this, you continue to minute 5 or minute 1. Let us use minute 5. It's going to give us a good clear picture so that you can understand it very well. So if we go back here to our first leg like this, this is our first leg, and then here we have come and then we sweep it up. Do you see, after this leg swept up, we have here what? We have a very good break, or what we can say a change of character, because here we had the high, had the low, we had the high, and also it was like accumulation. Then the market faked up, that is going to continue, then they come back down with a strong. We have this what? We have this break here of structure or the shift in the market. So after identifying that, what you have to do to identify the order block. This is minute 5. We have to identify the order block where the market started exactly moving. We can see that this was our order block here, which lead this move to go down. Are you getting pain? Which have made in minute 15 2 candles of bearish or of consecutive, which are going down. So after doing that, you identify our order block, and then we wait the market to come and mitigate exactly that order block. So let us highlight our order block like this way. Like this. So that is our overall order block. You can see that the market came and tapped in very well. So when the market tapped in your order block, don't execute there and then. Wait to see the candle which are moving. Are you getting the point? How they are reacting. You can see that the candle, they touched it very well and then got rejected very, very well. How do you enter here? You enter like this. This is how you execute. What you have to come to do, you see exactly this after getting the rejection, this candle, and the next candle following, showing the momentum that sellers are going down. What you have to do, you can also scale down to minute 1, or you can execute after this minute 5 engulfing area here, this area here. Do you getting the point? Let me do like this, and so you can see it very well. Do you see, after the candle taps to our order block, and then we break the structure around this area, because here we had a high, we had a low, we had the high, we made the low, we made the high, we entered here in the order block, and then we made the low. Are you getting the point? We made the high, we made the low, we made the high with this candle, and then we break this structure area here. Do you see this? We break it. After breaking that structure, the market continued down with the move. So after that happened, what you have to do, the market is very hard to come back to the order block. Sometimes it can come to the order block. What you have to do, you can execute after this minute 5 close here. After this minute 5 close around this area, you can execute. You can find an imbalance areas, what we can say that fair value gaps. You can do them like this, because from here, from this area to this candle is where the market has not filled, that it will come back to fill that area. Do you see it? Like that. And the market came and filled that area. Are you getting the point? Where to put your stop loss? Even though you have placed your entries at around this area, or here the fair value gap. When you trade this fair value gap, you have to put, don't put here or in the middle 15%. No, put where the exactly here the fair value gap starts. I'm going to put your entry. If you put your entry there, make sure the stop loss should be above this order block, which what we got from the high time frame. Are you getting above like that? Do you see? And when to take the profit, you have to swing down. You find 1 to 2, not trying to get a lot, trying to catch a lot of movement. No, because this is a ranging market. You don't know when it will reverse. You see? And that is exactly what happened. After giving you the profit, and then the market what? Reversed, comes back for the next time. Are you getting the point? For the next time. Tried to take another round this here area, this one. After they took it, also the same thing happens again. You can see we broke. After breaking, now we find the fair value gap again. Do you see? We find the fair value gap. This area was filled, this area was not filled as well. If we do like this here, we take it to the future, you can see like this. We see, did it market come back to that area? It have not come back. So if that has happened, there is another thing what you always to keep in mind. So do you see the market what did here? That's why you have to master everything. You know the characteristics and the behaviors, what does. Sometimes it comes back, sometimes it does not come back. So now I want here, what happened, what we call that rally base rally. Are you getting the point? We have a rally base rally, or we can call drop base drop. So that drop, and then we have a base, and then we drop. That base which happens there in the middle, it is going to be our order block. Are you getting the point? So if we try to find the order, the fair value gaps, are you getting the point? And then we see we have an area rest drop base drop near to the fair value gap. What we have to do to take your entry at that broken what? At broken order block. We can call it the broken structure. So what we have to do here, you have to make this point here drop, and this base, and then we have a drop. This area to be our entry. Are you getting the point? We make that area to be our entry. Why we consider this? Because this side, if we look left, like this, we have here a massive structure break. This one. Do you see? Because remember, this is M5. So if this structure, why do we consider it? We consider it because it was a move from here exactly it is, and then it comes back upward. Are you getting the point? Which means this was high, we had the low here down, we had the high, and then we broke this shifted from the buy momentum to the sell momentum. So if this happened, you can see that we have in this ranging place, this ranging area here, this from this consolidation, this, all of this, we have range. This range, we can, do you see that all of them, they are lying in the same direction? That this range was a support to push up, but we broke it. After breaking it, if we can try to identify the order block inside of this range, if we try to identify the order block of this range, we can see that the market started from this area. Are you getting the point? The last selling candle. This is the last selling candle. What we have. This is the order block. This is the ready candle. So if we take this ready candle, let me delete this. If we take this ready candle, our order block like that, and then we come to the red, you can see that the market came very well to test that broken order block. When they test that broken order block, we have a massive rejections. We do the same thing, but you don't take there to get a sniper entry. You just wait the market to show you if it will respect that order block, or if the market will respect your POI, the point of interest. How do we understand that the market, it have respected my point of interest by looking of the candle behaviors. You can see here we had a massive candlestick rejections. Are you getting the point? The moment you see a lot of candlestick rejections, those they are confirming that now the market is going downwards. What you have to do, you have to jumping in. If you jumping in right away like that, you get you sell here. Now here we have a massive rejections, and then this bearish engulfing candle happen. Boom, you execute there, stop loss above like that, and also you target 1 to 2, not targeting a lot of what risk to reward ratio. We do like this, and we see you can see very well that is around when the market came and the TP was hit. Very easy like that. So that is the way how you can catch the ranging sessions when the market it is on ranging. But the good range to be tradable, you should be getting them on high time frame. Daily range, those are good to trade. H4 range, those are good to trade. Minimum H1 range, but sometimes H1 they get faked out. Are you getting? They use them for accumulation. So now you can see this is a daily range accumulation, which means that is accumulating. They're accumulating a lot of buyers or sellers so that they can start moving more days. If it market buys, it will buy continuously. If it sell, it will sell continuously, because this is a big range. You can see if you can manage to get a lot of pips like this in a certain over range, it's too good. Are you getting the point? So how do we buy? We use the same tip. To buy. You wait, they sweep out one of the starting ranging point. You can see that this black line here, it was this area here, it was our first point. If we mark it like that and then we come to the future, you can see the market did the same thing and then wiped that out. After wiping, you can see in higher time frame we get here a big rejection. In this minute 5, we can see that also we whipped the higher time frame as a liquidity sweep. Also the minute 5 here, we swept it out like that after sweeping, and then we moved above. After moving above, and then we had a massive here, what we can call a break of the structure. Here we have a change of character, and here we have what? A break of structure. So after getting this break of structure, we can use the same thing to identify the any imbalance. Are you getting the point? Then you wait the market to come back, and we do what? You catch the movement. Are you getting the point? Or you can use the break and retest strategy. If you are getting scared after seeing this, so you mark the next high level like this. Let me delete this line. You mark the next high. For example, we have some highs here. Let me show you very well so you can understand. This is the first high which was broken by this. So if you are getting scared, what you have to do, you have to wait that the market also takes off this next high. What we have marked here, this next high. When the market takes off that, and then you just mark your this last high here, you mark it. After marking it, what you have to do, then you wait the market to come back and retest it. You can see very well if we mark this area from there to here, and then we take it to future like this. You can see that the market came and retest it. After retesting it with M5, are you getting the point? You execute here. You execute. Then this, when happen, it shows you that now the market have starting to going up, and then you will be confident. You don't need to panic here. So we look the long after this getting takes off, and then we come back to make a retest. We wait the minute 5 to close. Any minute 5, it can be a bullish engulfing, it can be the 50% like here, any green candle which will show us that now the retest is done. Then you do what? You execute after that candle close, stop loss below of the low, and also we target 1 to 2 like this. You can see 1 to 2 is about, yeah, hit. It's already hit. Do you see? 1 to 2 is hit from the sell side. That is how you can trade. That is how easily to trade. So bonus. This is going to be a bonus. Giving you a bonus. If you are still with me here watching, I'm going to give you a bonus so that when you are scalping, you know exactly what you are doing. Let me delete everything, the structure and everything. So guys, yes, scalpers, drop the comment below there. I'm opening some comments. If you have a question, just put your question there, and see. Let me see what is going on here, bro. Always you teach the right things, bro. And, thank you. Okay. I was seeing you guys in your comment to see what you have dropped there. So let us go back to the charts and then we continue. So by minute 15. I'm waiting the chart to load. Yes, it have loaded now. Scalpers. So to scalp, if you want to scalp, if you want to swing, if you want to scalp, if you want to flip your account, this is the strategy what you have to do to use. When you come in the market, don't try to see whether it's going up or whether it's going down. What you have to do, you come in minute 15. In minute 15, what you have to do, we have to identify something like this. This is what you have to do. Where is my pencil? Pencil. What we have to identify in minute 15, how always have to identify the range. After range, you wait the break of this structure, whether it goes up or whether it going down. So whenever the market breaks this range, you execute stop loss there very tight, and then you target 1 to 1. This is for flipping, 1 to 1, flipping only. That is what we need only if you want to flip or if you want to do what, to scalp. Very faster. Don't stay so much in the market. So you can see this is the minute 15. We have to identify the range. It can be 1 candle or 2 candles or 3 candles. That is a range. Any opposite candle, when you see it in minute 15, that is a range. What we have, drop, base, drop. Are you getting the point? We wait the drop to be broken and then we execute. So how do we wait? We get this. If can be 1 candle or 2 candles, that is good. If they be more than 2 candles, that is amazing. Are you getting the point? So whenever you come in minute 15, we try to find an opposite candle. If the market is going up, identify the red candle. For example, this market was dropping down. Are you getting the point? And then we have an opposite candle which going up. We wait that to close. If that candle close, then we highlight that candle like that. After highlighting that candle like that, we drop down to minute 5. Are you getting the point? Come directly to minute 5. And then we start watching the market. If it closes above, we buy. If it closes below, we sell. Do you see? This was our highlighted what? Our highlighted box. So exactly when minute 5 close below of that candle, we execute it like this. Then you execute exactly when it close. You execute like that. We have to put the stop loss above that candle which has broke that exactly box like that. Some pips little bit above, and then you target 1 to 1. 1 to 1, not targeting 1 to 1 like that. Do you see? Very fast, and then we are done, because the market can go and then comes back. 1 to 1, no 1 to 2, 1 to 1. you're done. Then you come back, you wait another what, and you come back to minute 15, you wait another setup. You look any opposite candle. Now, for example, let me delete this. Now, for example, you can see here we had a range, this sell, and then we got this more opposite pullback, and then the next candle also goes above like that. We highlight all of this range like that. You can see. So how do we now? Let me take the first green candle like that. That is our range, and you can see that the market break above like that in minute 5. Did it close? Let us go to minute 5 and we see. If it does not close above with over 50%, you don't take the trade. Do you see what happened? The market didn't close 50% above. Or let us say that we took it. That was a loss. That was a loss. And then you come back to minute 15 and you see what is taking place. If you see like that, then you make an adjustment of the area. Now here the minute 15 close below and then it goes inside. You make an adjustment like that. You see, like that. You wait, they break it. You come back to minute 5. Exactly. Do you see? M5 after breaking above here is when you execute. Execute buy now. Here, this is when the minute 5 closed above. Execute, stop loss below, target 1 to 1. Hit very fast. Do you see? 1 to 1. You want to get greedy? 1 to 2. You want to get greedy? 1 to 2 also hit, but always take 1 to 1. Don't take 1 to 2 like that. You come back again to M15 and then you look any opposite candle, you highlight it, and then you wait the market to break. If it break going up, you buy. If it break going down, you sell. Yes, I think you have got any question. If you have any question, guys, drop it to the chat box there, and we see what is taking place. And guys, if you are new here, make sure to subscribe to our channel so that you don't miss, because these are free classes. We are going to be moving daily every single day with these classes. Make sure to share the live, tell everybody so that we have free classes always. We're going to be here on YouTube. Don't forget to join our free signals daily in our Telegram. The link, it is all in description below. See you to the next live. Peace.